Welcome back to Press here. Would you lend a chunk of money, say $10,000, to someone just out of college? No income, no real assets, and very little credit history. A bank almost certainly would not, but if I told you that same person just graduated from, say, Harvard Business School is about to start her job on Wall Street next week, well, that kind of changes things, doesn't it? I would lend to that person because she has a future, and that is the difference. Banks loan based on what you've done in the past. Common sense says you should loan based on what the person will do in the future. Certainly the general idea behind the loan company Earnest, which says it looks beyond credit history and FICO scores and looks carefully at potential when it decides to whom to loan. Louis Barrel is the founder of Earnest Loans, himself a Harvard business grad who had a tough time getting a loan. Thanks for being with us this morning. So it would seem obvious, but obviously banks have been doing this for a long time. They must know what they're doing. Why is your system better?
Yeah, thanks, Scott. I think what we do is we do the most thorough underwriting in the whole country. And we do that by really digging into everything about a person's full profile. So we're looking at their education and employment history, not just at a point in time. We're looking at metrics of financial responsibility. We look at bank accounts, late fees, or lack thereof.
Well, so do banks.
Well, not really, right? So most banks, what they're looking at, they try to make the process as quick as possible. What we're trying to do is go back to 150 years ago, where your banker actually sat across the table and got to know your full story. That's what we're doing. We're incorporating the full picture.
You literally look at people's LinkedIns.
That's one of the ways we connect through their education and employment histories. But let me take it to the next level. So things like your 401k, your retirement account. Banks don't do that, not for a credit card, not for small loans. We're able to see these metrics of saving for the future and financial responsibility that big banks don't look at.
Someone who takes a big chunk out of their paycheck and puts it towards retirement is probably a pretty intelligent financial person and is probably trustworthy. And
they're planning for the future, and that's what we're looking at.
I know one of the things that you're looking at is education and earning potential. So I was wondering, if I majored in French literature, would you judge me to be less creditworthy than if I had majored in electrical engineering?
So I think we don't have anything that's prescriptive. What we try to do is take every applicant and look at them as an individual. So French literature, and you're a teacher, you're very financially responsible, you're saving every month. That's what we're trying to look at you as a person. On the other side, you know, you're a computer scientist, you're a software engineer, your income's growing very quickly, maybe your expenses are higher, but nothing's prescriptive. Our model and our software looks at every person as an individual, and that's a big breakthrough in lending. That's not the way it's done today.
So you're using technology a great deal, but you're also looking, because you're looking at things that aren't necessarily always looked at, what are the privacy implications of all that? I mean, are you really picking through my entire life?
I think our philosophy here is there's a couple of things. So first is our typical client is really a digital native. You know, a bank is going to look through your bank statements for a home loan. They're going to look through, you know, create a whole profile. But we make it very quick, very easy, very cheap. That's why we're able to deliver very low prices for our clients. But on the other side of that, what our focus is it should be about what you deserve to pay. And if you're very low risk, by us digging in deeper, that actually gets you a much better rate. And that's why you should want our type of service.
Would that include things like looking at my Twitter feed?
No, so we try to only focus on things that are causal to your ability to repay in the future.
Okay. So the funding, when you give me money, this money is, you aren't reselling this loan, right? I mean, this is purely funded by you, and that money presumably is then coming from the venture capitalists who are backing you up. Is that a fair assessment?
Yes.
Okay. So you say you're trying to get these loans as low as humanly possible, and as the borrower, I really appreciate that. I, as the venture capitalist, don't like this at all, because I'm taking my money and you're saying, look, we're getting 3% return from Scott on this. That's a terrible investment. I mean, in many ways, and you can't make up for it with volume, right?
Well, I disagree with part of that, but I think what the venture capitalists love about our business is, unlike a traditional financial institution that always focuses on a single transaction, we are much more, our business model is much more like the best technology and consumer brands that are focused on lifetime value. It's about building a really long-term relationship.
So that you have more loans from the same... My point is, if I give you $1, I want 12% back. I don't want 3% back. And no matter how many dollars you lend out, you're just giving me 3% back.
Or is what you're doing actually developing the technology that you can then license to the banks themselves?
The way that
And
Fair Isaacs
so,
does.
So your actual lending becomes sort of your loss leader.
Right, so we're not doing that. I kind of
Okay.
view that as, that would be like Amazon creating their infrastructure and then selling it to Barnes & Noble. But what we do is our software and our data, there's a bunch of things. One, it dramatically lowers our infrastructure. Think about all the buildings that all the banks have out there. So we're able to do this a lot more efficiently. And it's actually based on our underwriting procedures are actually much better, so we can make better decisioning. And so our costs are much, much lower. And then we're able to keep those clients for much, much longer because we're delivering so much more value to them.
And you're getting fewer bad loans. That helps the bottom line as well. Would that be
We have
fair?
100% on-time
Oh,
repayments.
well, that's not bad.
Now, you've never loaned below a FICO score of 600. Is that correct?
That's actually not 100% correct. We have one 597.
Now, do you ever see yourself going below significantly below a FICO score of 600 and potentially disrupting, let's say, the payday loans industry?
Well, so I don't think we'll ever go down into payday loans. That's a totally different market. It's a totally different demographic. But what I would say is we really ignore FICO in our underwriting process because that's just really not what we're looking at. We're really looking at the full picture. That said, FICO is it's not the best model, but the model on certain levels, all the way down, all the way at the highest end, does work to a certain extent. So if someone has a very, very low FICO, there's probably other extenuating circumstances that cause them to be there.
Lewis, do you see that Wells Fargo or somebody might adopt this idea? Is this a business the big businesses might get into, this disruption?
Amazon, after all, Amazon does make its infrastructure available to others through Amazon Web Services and
Sure.
and other things. So in
Yeah.
that regard, why isn't that a better business model?
So our mission at Earnest is better access to credit to millions of Americans at earlier ages and at cheaper prices. I would love it if Wells Fargo and Bank of America and JP Morgan and all those other large financial institutions started doing better underwriting and started offering cheaper prices to millions of Americans that deserve better rates.
Lewis Barrel, the website is actually Meet Earnest,
Yes.
correct? All right, Meet Earnest with Earnest Loans. Thank you for being with us. Press here will be back in just a minute.